Everyone, welcome to another edition of Trading Bitcoin with your host Tone Vays. We have our fourth guest for this week. Man, Bitcoin starts pumping and guests are coming back to the trading show to make it a lot more interesting. So let's welcome David Puell back to the program. It's been a while since you've been on this show. And so looking forward to what you've been up to, the research that you've done lately, and see what's going on. Go ahead, David. Talk a little bit about yourself as I pull up your Twitter profile.
Hey, long time no see. I think last time we spoke on a live feed was, I think it was Tyler and Leah hosting something about a Friday. It was a Friday night, and it was quarantine times. So I'm David Puell, mostly known for my on-chain research. Independent trader and researcher right now. Previously an adaptive. And that's about it. I think most of your audience knows me by now, hopefully.
Yeah, well, the audience is coming back, man. The views this week, they're coming back to that early 2017 level. So
Nice.
it's really interesting how the views and my audience fluctuates perfectly with the price of Bitcoin. Really, really fascinating. You should probably do some analysis on that. I haven't actually looked at Google Trends in a while as well. We got so much to cover. I do want to get to the PayPal news with you as well. Also, guys, David hasn't written in a while, but he does have his Medium articles. That looks like the last one was June 2019, or is that just a pinned one? You got to write up some of your stuff. People still talk about the Puell multiple, man.
Yeah, I have some research coming up, but some of it independent and some of it not. Hopefully within the next month or so, maybe late November at most, you can see some of it. On my own, I've been mostly focused on portfolio theory, and I was very interested in the whole Bitcoin correlation with S&P and gold since the COVID panic. So I've been working mostly on that, getting some sharp ratios, trainer ratios, appraisal ratios on that, see if a signal or, a way to measure Bitcoin's residual and systematic risk emerges. So hopefully in a few weeks to a month or so, I'm able to publish on that. And I have some other stuff coming up that I will announce later on.
All right, perfect. We'll get that at the end. I am about to get off screen share and just hand it off to David. He's got some charts to share. But real quick, here's the format as usual. I want to take 5 minutes and just go through my charts just to give you guys that normally watch me my view on the market. Also, I get to visual my own chart, see where the price is right now. Then after David goes through his on-chain stuff and his TA stuff, I have a bunch of charts from Willy Woo's recent newsletter that I'm hoping he doesn't mind me sharing. And then a couple of other charts, most of them having to do with fundamental analysis. And then we're going to close out talking about PayPal. So real quick, here is my look at the charts. Here is the weekly chart of Bitcoin. And just like I said on this morning's show with Jimmy Song, this is very bullish to me. This is like the 7th highest weekly close in the history of Bitcoin. If we close at this level, we pulled back a little bit today. We're now going back up a little bit. I'm liking where we are. The weekly time frame for me is very bullish. The daily time frame for me is consolidating. We'll probably hit an MRI top within this consolidation, and it does set us up for more upside along with the weekly chart. The 1 hour and the 4 hour charts have been pretty much neutral and not very helpful, at least for me. That's a beautiful reversal candle right here. This dragonfly doji. And if we can go up above this doji on a 4 hour scale, that should look nice going into the weekend. That's basically it. I'm curious where gold closed today. I'm not happy with gold right now. Maybe we'll get David's take after. And the S&P is consolidating like I expected. for this particular election. I think this U.S. election is different than any other election. All right, that is my overall view on the price of Bitcoin. I'm going to stop my screen share and hand it off to David, and it's up to you. Do you want to talk about TA first? Do you want to talk about on-chain first? Your call.
Yeah, I have some tabs ready, so let's go through them in order. I'm going to start with the TA.
But do me a favor, before you move on from one tab to another, pause and ask if there's any questions, because I almost certainly will, and I always get yelled at for interrupting my guests.
Okay, fair enough. Well, TA, what I've been looking at, I still look at funding a lot. Since the BitMEX KYC and arrest transpired, I wanted like double check not only what BitMEX premium and discount is doing, but also like double check it with Binance. So the second oscillator is Binance, perpetual premium or discount. And this late one is an indicator shared by CL. He's popular on Twitter, so credit goes to him. And it's like an aggregate of all the perpetual futures across several exchanges, most derivative exchanges today.
Oh, really? Hold on. I wanna go find that on my side.
No, it's not public. This one is not public.
Oh.
Actually. Yeah.
Oh, okay. So it's a friend of yours.
Yeah. He's a good trader. He was an analyst in Adaptive.
Oh, okay. Oh, cool. All right. So if you guys are ever having a beer, tell him to add my name to the approved list.
I'll do it. So as you know, pretty much what I'm seeing in terms of support and resistance on a local level. How do I remove this? Okay, perfect.
Remove what?
Something was blocking my view. No worries.
Oh.
So on a, let's say, 4-hour to daily level, this is the most relevant zones, mostly support, because we're breaking highs in this time frame. So I'm just pretty much getting support levels if we get a pullback to initiate maybe some leverage positions and all that. As you can see, I mostly look at funding rates and premium and derivatives from a higher time frame perspective, not from the minutes, 5-minute, or even hourly charts. It's mostly daily charts. I think that's the best view, 12-hour, maybe 4-hour. As you can see, funding is extremely healthy. We have nowhere near the levels of positive funding rates that we had at this top right here, right? We saw that top on BitMEX, on Binance, and pretty much across. The way I look at funding is the greater deviation, the better the signal, and the longer the period the funding remains either positive or negative, the better the signal as well. So this is a perfect example. This right here, which was a very obvious stop, in hindsight, gave us a very obvious positive funding regime in both Binance and BitMEX, and then it corrected, and now we had very consistent negative funding on pretty much every exchange for the most part since 10K, right? So as you can see, BitMEX is very bullish, and Binance is more neutral, right? If you go to the 1-minute chart, let's say, you have a lot of intra-daily noise like this, which is like positive funding, which is bearish.
That's a little too zoomed in for me. Let's do like 5 or 10. I don't see how 1-minute charts are that useful.
5 minutes are like the most predictive, but it's pretty much replicates the same thing. And as you can see, like we're going through at least some lack of buying, mostly coming from Binance. But on BitMEX, I mean, it's not as reliable now as it once was, but it's looking good overall. And if you go to a daily perspective or 12-hour perspective, it's still very, very healthy. I mean, we're nowhere near the deviation or the elongation in terms of time period that we saw like here or in other tops like like this one, right? 1 second. Like the China, like the COVID panic. I mean, there were clear signals of this thing is fucked up. 1 second. There we go. So this whole period was a lot of distribution going around the market. You know, it started pricing in the COVID panic and it dumped, of course. It's been very consistent over the last 2-3 years. And it's still very consistent today, even despite the BitMEX news with the KYC and some REITs arrest. So I keep monitoring that overall, just, you know, double checking it with Binance and other derivative premiums, just to make sure it's not like the signal is not wearing off. So this is just funding rates, which I'm looking at. This is a few support and resistances that I'm like taking notice in case it corrects. In terms of chart patterns, I don't think you have introduced one like this before, but my friend Adam Taché uses it a lot. It looks kind of like an ascending channel, but technically it's a Livermore cylinder, which is a bullish formation, you know, developed by Jesse Livermore back in the early 20th century.
I am not familiar with that pattern.
Yeah, and it's very useful, especially for Bitcoin. I mean, credit goes to him because he mostly looks for this kind of cylinder on Bitcoin. And it has proven to be very, very useful. So, I mean, the projection for this is kind of like an ascending channel. You could see it here. Like if we go, let's say, to the weekly chart, I can make another one for you. You have descending ones and ascending ones. So this would be a very nice example of a broadening.
Yeah, it's like a broadening top or broadening
Yeah,
bottom,
exactly.
yeah.
So it's like an ascending or descending channel, but it's broadening or in a way.
But are you seeing it broadening now? Because I don't.
I do. Go back to daily. Yeah, I do, because if you trace this, it's kind of broadening out. Like here, it's not as extreme.
That's a very small angle.
Yeah, but I mean, you can take it as that or as a regular ascending channel. Either way, I consider it a bullish pattern. And if it breaks out from this trend line, obviously extremely bullish. And also,
so let me ask you this question: do you see it breaking out? I mean, look, I'm very bullish right now.
Yeah,
do you see it breaking out of this channel to the upside without back testing the middle of the channel? Because if you look, we spent all of September and most of October in the bottom half of the channel. So wouldn't it make sense that we get rejected at the top of the channel, come back down to the middle before an eventual breakout?
That's a very possible, maybe not probable, but very viable possibility, in the sense that if we go to the weekly levels, which was going to be my other chart.
Either way, it's a giant spike.
Yeah. I mean, these are the weekly levels that I'm monitoring. The next great resistance is at pretty much 14K, almost exactly. 30.
Yep, I'm with you there. I've said
right.
that already. So many times this week.
Right. So this is I think this, and there's pretty much nothing up to 20K. And 20K, at least we get maybe some pullback, but I mean, it's super fucking bullish going there either way, right? So weekly close like this, as you mentioned already, is extremely, extremely bullish. It's the first high in, I don't know, especially from a weekly perspective, is the first high in, I don't know what, like 2 years or something?
2 years, yeah.
Yeah,
more.
It's extremely
over
bullish.
2 years.
Yeah.
Close to 3 years, like more than 2.5 years away.
Yeah. Like we're getting to top of the bubble 2017 levels without being a bubble, right?
Right, well, exactly, and that's the point. Like, it's Bitcoin is going up, and like I guess the Wall Street term is we're climbing a wall of worry. It's like everyone is worried and the price is not. And this is actually a good place to be. You can see it from the funding rate. You can see it on like fear and greed indices. You see it everywhere that we're about to get to that 14,000. and not a single metric is screaming overbought to me.
Yeah, I agree. No, not TA, not on-chain, not sentiment indicators. Like it's pretty.
Not even like FOMO. Like I'm actually curious. I'm gonna Google on my end, Google trends for buy Bitcoin while I'll let you go on, because I don't think that's anywhere near even early mid 2017 levels.
Yeah, we can go over that. I actually haven't checked, but I imagine it's nowhere near that. And you can see it from the sentiment. Like people asking about Bitcoin is very scarce compared to 2017. And I always notice that, you know, from my network and whatever, like non-crypto network, it's not the same at all. There's a lot of skepticism around. A lot of people just don't care about it. That goes from Latin America to North America to Asia. There's really no interest in this except for, you know, actual investors who have the potential of pulling out the price, you know, meaning PayPal, Square, MicroStrategy, Paul Tudor Jones, and several other major market actors. But apart from that, retail is sleeping on this, and that's a good sign. Always, you always want to be on the side of smart money and not the side of, you know, the masses in the market. So, you know, technically, if we go to 14K, we may get some resistance there. At the most, I would see a correction to, let's say, high 11s. Feel a CME gap around those levels, maybe a week there or something. Because for the most part, it's very, very bullish. The whole price action, the market structure, chart patterns, everything is bullish. Going back to, but even more so than Bitcoin, I wanted to go into the correlation. I'm assuming you've discussed this, the Bitcoin gold and S&P correlation that's been going around since the COVID dump, right, in March.
You know, I haven't had time to put any metrics to it, but I watch all three of those all the time, and like I understand the correlation between the three of them, but I always have trouble explaining it to the layman's person because it's a very complicated dynamic. So let me get your take on this, and then I'll throw in my 2 cents.
Well, if you go to traditional finance, right, you have several terms that try to estimate correlation in the market. And the whole thing about correlation is capturing systematic risk, which is the risk that, so you have two core types of risk for an asset, right? The residual risk or the total risk of the asset, which would be the risk of the asset in itself, right? Let's say a company, right? If the CEO dies or gets arrested, that's inherent risk for the company itself, right? But the systematic risk that correlation tries to capture is the risk of the asset related to the broader market, right? One of the main buying propositions or investing theses for Bitcoin historically was that it hasn't had any long-term correlation with any asset, not even gold, despite the narrative of, you know, store value, digital gold, and all that. And that has been, you know, tremendously useful as an investment thesis to, you know, new money coming in the market, especially institutional money, because most of them, you know, what correlation is saying is how much statistically is how much can you explain the movement of one asset by the movement of another asset, meaning that if you have if you have high correlation going from 0 to 1, or, you know, 0 to 100%, most likely, I mean, causation is not correlation, but most likely the buyers or the market actors acting in one asset are the same that in any other given asset, right? So what we saw after COVID is that pretty much every major asset class in the market, S&P, gold, silver, Bitcoin, all of that, starting picking up in correlation. That usually happens in bear markets and, you know, severe crisis. So that's kind of expected in the COVID panic. That's kind of normal behavior, but it's not very common in bullish trends, right? So everything kept going up. You can go back to several fundamental reasons for that, but in a very correlated manner. This is a chart that kind of goes into that. What you're seeing here is the blue line is gold, the red line is S&P futures, and the white line is a ratio between S&P and gold. So as you can see that they have pretty much stuck together in a kind of like a symmetrical, wedgy kind of looking triangle since the Dovid dump, right? And during this period, the correlations, I posted it on a tweet, the correlation, the 90-day correlation, let me put up the tweet, has gone pretty much between 0.8 and 1, which is extremely high. There's this is an update of this tweet I posted a few weeks ago. You have the 3 charts, and this triangle is what we've seen during this period of high correlation, right? This is the 90-day S&P and gold correlation, which has oscillated between 0.8 and 1 since then. I've also, that may be for another publication because I don't want to go into that deeply, but I've tracked a lot of the normal or most famous risk-adjusted return metrics in traditional markets and trying to get how much this correlation is affecting Bitcoin, not in terms of total risk, which would be a Sharpe ratio, right? I'm guessing most people are familiar with the Sharpe ratio, but I've tried to do a few other iterations with Bitcoin, specifically 2 different types of ratios, which are the trainer ratio, which instead of dividing, Sharpe ratio divides average returns by average returns by volatility, standard deviation. So that gets you total risk under some assumptions. But trainer ratio, for instance, divides average returns divided by beta, the beta coefficient, right? The beta coefficient is pretty much the slope that tries to capture the inherent volatility and correlation between one asset and the other. And if you would have compared the beta coefficient between Bitcoin and the S&P post COVID dump, the trainer ratio was quite lousy because the correlation was high. So you don't want that to happen ideally because it denotes more systematic risk. And then I tried with an appraisal ratio, which is kind of like the Sharpe or information ratio, but it tracks, you're pretty much weighting the beta coefficient in both the numerator and denominator to try to get both residual and systematic risk into a single equation. And that's more natural. It's not as bad as the trainer ratio, but still, this whole triangle right here during the period of post-COVID crisis has been, I think, the most worrisome thing to me because price action, sentiment, on-chain has been looking good. But the main worry is that if something happens to equities or the broader economy, what happens to Bitcoin, right? And the whole proposition of Bitcoin, which is, SOV, anti-fragile investment, anti-inflationary hedge, what would happen in, a wider economic collapse or a deflationary environment, which was, I think it's one of the least talked about things about Bitcoin, right? Everybody keeps talking about inflation or right tail volatility, but nobody talks about deflation and widely falling asset prices. So that's worrisome. But I was very excited to see the last pump in Bitcoin, since this week pretty much, having that pump without either gold or S&P going with it. I think that's like the most valuable thing that happened this week beyond price. Like, I think is the most important part. So if Bitcoin can go back to doing its own thing, that's just perfect. I mean, the main narrative of Bitcoin should be as an asset of long volatility, not as an asset of store value, in my view. Meaning long volatility is you have a battle-tested asset that is resistant to inflation and deflation, and that behaves like gold in inflation and behaves like cash in deflation. I think that's you have the master asset if that's the case, right? Because I mean, both.
And that's actually kind of perfect. I don't know. Yes, I'm interrupting you again. It's what I've been saying. Bitcoin does have a correlation to the stock market, in my view. But I think that right now, people keep asking about this decoupling. And my view is this. I think that if the S&P starts to really fall, Bitcoin will just stay kind of flattish. But if the S&P starts to really rise, Bitcoin will significantly rise. So we're very highly correlated with the S&P if the S&P is rising, but I think we're generally uncorrelated with the S&P if the S&P is not rising, meaning Bitcoin can rise, fall, or just stay flat.
That's exactly the whole proposition of the concept of long volatility. I mean, it's not mine. The concept goes back more to Mike Green and Chris Cole, Artemis Capital and those guys. And it's about, if you're longing volatility, you're pretty much longing on stability and chaos, right? So that's exactly what you want to happen. I mean, we're obviously in very chaotic times. So you want to hold an asset that if you have rising asset prices in an inflationary period, it just pumps with the rest of them and it pumps with more momentum, right? And if everything goes into deflation and asset prices start collapsing, then you at least want it to stay stable, right? Like kind of that's the perfect asset. Like that's pretty much going into the options market and developing a long volatility strategy and just trading right and left tail volatility and gaining from chaos, right? Which is the whole Nassim Taleb position of anti-fragile. But if Bitcoin has the power to replicate that without going into derivative options market, just as a bearer asset, I mean that's fucking perfect. It's the best asset to ever exist. So going back to charts, right? This triangle is kind of important, I think, because I don't think it's sustainable. Hopefully this ratio, this triangle in the ratio of S&P and gold breaks out either up or down. That doesn't matter. But what's most important is that I think perhaps by late November or something, end of year, perhaps after the elections, you're gonna start to see some decoupling between S&P and gold, and then you can track Bitcoin, to see which way it's going. Hopefully, it just keeps going up. I mean, unless there's a huge indexation and ETF bubble going on in equities. I think it's one of the biggest bubbles ever, but you never know when it's going to pop. So hopefully everything just keeps pumping and and we'll take it from there. I mean, it's kind of like knowing you're in a bubble, but just riding it and embracing it a little bit. Going into the on-chain stuff. So this is some of the stuff I mostly check on a daily to weekly basis, aside from TA and funding and future spaces and all that stuff. 1 second, it's loading. So this is the SOPR, Spent Output Profit Ratio, created by Renato Shirakashi. And this is a very nice metric for getting tops and bottoms. I'm just going to apply a 7-day moving average or something to make it less noisy. 1 second. Let's go with a 7-day median.
You're on moving median, not average.
Yeah, I mostly use medians for the on-chain stuff. I think it's, well, as you can see, you have a 0 line. Well, it's a number one line. The spend output profit ratio tracks. It's a ratio between the price of the coin when it was spent divided by the price of the coin when it was created. So it's pretty much just tracking the aggregate of coins individually whenever it goes up or down. The most important aspect of this indicator specifically is you have number one, which is the neutral part. But in bull markets, as you can see here, it pretty much gives you every local bottom until the top. And whenever we cross the one line and going back to below it, it consistently gives you the tops, right? So after, I mean, this whole period here was quite messy for Bitcoin. Let me go and zoom in. That whole period was quite messy for on-chain, for every metric. It was extremely confusing to trade, very hard to get a grasp on. So you had, you know, the bubble top from here, and I think I described all this in a Twitter thread a few months ago. You have the bubble pop in 2017, created, you know, by just natural irrational exuberance, ICOs, all that stuff. And then you go into a great compression here. The hash wars collapse and capitulated the market into 3K. And then the interesting stuff started happening, which was price kept, you know, developed a sort of mini bubble. You were very bearish during this period, I remember, right? You were like, this is unnatural in a way. Right?
Well, not necessarily there. So I was bullish at 4,500, but I took that profit around 5.6. And as it started to break 10K, I felt this was insane.
Yeah, exactly. Like
so where you have your cursor, I was still bullish in that zone, but if you move it to the above your horizontal line, that's when I thought this was insane.
exactly. So what you're seeing here is it's pretty much a mini bubble that at the time nobody paid attention to the main cause of it, which was plus token. I mean, plus token was not only the reason for the dump to 6K, but it was also the reason for this.
Right, and that's why I couldn't explain it. Like once the price of Bitcoin went above, say 7,500 or so on that rise in early 2019, I was just dumbfounded and made me look kind of stupid as it goes to 14K. I couldn't explain it. It made no sense.
Right.
Why the hell it's doing that? In hindsight, it was the plus token scam. But at the time, I had no clue what was going on. It made no sense to me at all. I couldn't explain it.
Yeah, so what you have in that is exactly the opposite of what you have right now. Right now, you have, you know, publicly traded companies going into, you know, putting their reserves into Bitcoin, major Wall Street people like Paul Tudor Jones investing into it. You have the whole narrative of, oh, we're in a crisis, so therefore buy Bitcoin. I mean, the whole thing is looking much better fundamentally and on a news-related basis. But at that time, it was just a parabolic move that was caused by, you know, on the one hand, just people buying a scam in China, and therefore supplying the restriction, which was 1% of the whole Bitcoin supply at the time. That pretty much explained the whole move. And then the distribution pretty much started during this whole period at, you know, between 10 and 14K. That collapsed the price. The price actually held quite well during this whole period. You can pretty much track the tops and bottoms that, you know, whenever you saw a lot of selling behavior from Chinese exchanges, that pretty much amounted to a top because those coins were being sold off into the market through Huobi and a few other Chinese exchanges. So once we got here, plus token was mostly out of distribution. Like most of the coins were either sold or, you know, stay unmoved. So the selling pressure came down a lot, and we started going up. But even from this, you know, late December, early January, especially coming from funding and a few deltas between Chinese and Western exchanges, you started to see a lot of distribution coming from China again, meaning they were starting to price in a lot of the COVID stuff, right? Then the West got stopped that and the market collapsed. But after that, I think given this the huge stimulus that came from the US, the whole inflationary narrative that was going on in the markets, a lot of investors, especially coming from the West, starting to go into new money and actually buying Bitcoin from 5K and pretty much ever since then, right? So, you know, that day was fucking scary, of course. I think it's one of the worst days for Bitcoin, but fortunately, it provided the opportunity for new money to come into the asset in a way that hasn't been seen before, since, we haven't had since the previous bull market, right? Like pretty much 2016 or so. So
Right.
that's good. So going back to the SOPR, this pretty much gives you tops and bottoms. As you can see, you still have your levels of overvaluation and all that, but for the most part, whenever it bottoms, assuming you're in a bull market and you're in on the number one level, that's a very, very good buying opportunity, right? So we've had that consistently. Again, this whole period is quite messy because we have first Plus token and then COVID. But after that, it regained the consistency of, bottoming at one, as we can see here and here as well. And as you can see, we're nowhere near this overbought levels, right? So
yeah, it looks great. And more metrics to show that the bull market is just getting started.
Exactly. And even if it goes to overvalue, that would be like in a local sense, right? That would be for like just a regular 20-30% correction in Bitcoin, and that's it, right? So it looks very, very fucking good. Now we're going to NVRV. I mean, most people are familiar with the NVRV ratio. There's several new iterations on NVRV. I mean, there's an example. I mean, most people know the NVRV ratio created by Murad and myself. Then Owen Wonder created the C-square, which is pretty much the same thing, just adjusted for volatility, but few other metrics have been implemented by Glassnode. So this is the one I like the most. This is the short time horizon NVRV ratio. And what it's doing is, the NVRV is getting realized gap, which, timestamps the UTXO at the moment with the price since it was last moved. But the short time frame NVRV ratio, what it does is it segregates all the UTXOs that go older than 155 days. So what you get is this chart right here, which is like an adjusted NVRV ratio that actually gives you a number one line, meaning that the coins that were, among the coins that were moved in the last 155 days, which ones are on a cost basis, which ones are overvalued or undervalued. So as you can see, it's pretty much the same signal. Whenever you go to one on a bull market, you get the bottoms, like here, like here, like here, here, here. And vice versa, whenever you're in a bear market, you get the tops when it goes to one. Here, here, here. Again, it got quite messy during this whole Plus token and COVID situation. So it like kept crossing over. It was very typical in the history of Bitcoin. But again, zooming in, we're starting to see that same, natural going back to one, bottoming, and then pumping again. And as you can see, we're not nowhere near the last stop in terms of overvaluation. So another metric that looks healthy. This is realized profits and losses. This is a bit noisy. It has 7-day median on both of them. What you're seeing here is So whenever you have a transaction on the blockchain, what it does here is, this is the aggregate in USD value of the profit staking by all the coins that moved during that day. So the green line is profits and the red line is losses. Let me give you an example of how it works. I'm going to zoom in here. So what you see here is, the green line, which is the profits, crossing over the red line, which is the losses, obviously, because the trend is up. And then after that, you see the crossover again into where the losses take precedence, and that gives you pretty much the bear markets historically, the crossover. It's a bit noisy, but for the most part. And also very interesting is what happens in periods like this one, right? You get the top at late 2013, and then unrealized losses go through the roof at the first sign of capitulation, meaning that all the people, one second, it's kind of stuck.
Right, all the people that bought the top are in trouble.
Exactly, are pretty much selling selling at the bottom, right? Which is happens very frequently in the markets. So this is, this thing is getting laggy. But anyway.
No, it's okay, I get it.
Yeah. So that's pretty much what you're seeing here. Going back to the current period.
Right, so these are realized profits and losses. Okay, I see. Yeah, let's take a look at it at the bubble, at the $20,000 bubble, and then I'm curious what it looks like at the $14,000 bubble.
Yep. It's kind of the same. You have the top here, but at the first sign of capitulation, you have huge losses realized, right? Which means all the people who bought the top, between 17 and 20K, are selling at 6 and 7K, right? And that goes on and goes on and goes on. And then here, just as much, right? You have the huge capitulation, and then you start getting the crossovers, like here. Same thing happened in the 14K bubble, and after that, you keep getting that messy period with Plus Token and COVID, and you start seeing a lot of crossovers, no consistency, right? Then you have the COVID, which is one of the highest spikes in.
Oh yeah, that looks. I was gonna say for the last, it looks like to me for the last 12 months, it looks like there have been more losses realized than gains. There was some good gains realized back in August, and now we're about to get some nice gains being realized over the rest of the year.
Right. Yeah, you had like 3 extreme periods of capitulation, which would be this, which is the initiation of the first dead cat bounce in 2018, right? Then you have the collapse to 3K, which was the literal bottom, and then the COVID dump, right? That was like the highest register in realized losses in the history of Bitcoin. So after that, we recovered, and now, there's some noise here, but for the most part, everyone's at a gain right now. You can also see this in percentage supply and profit, which right now we're almost at the top. Because we're near the top, right? So, another bullish thing, I guess. Let me go to the next chart. 1 second. So, this is also a stablecoin supply ratio created by Renato Shirakashi. This has been bullish pretty much since the collapse from 14K, where what it tracks is a simple ratio between the Bitcoin market cap and the stablecoin market cap. In this case, it aggregates USDT, TUSD, USDC, PAX, GUSD, DAI, SAI, and BUSD, the most widely used stablecoins in the market. And so what it's tracking is, since you have stablecoins in the denominator, whenever you have an increase in stablecoin, you see the indicator go down, right? So the assumption is the lower the ratio goes, meaning the higher the stablecoins, the more purchasing power in the market at any given time. And as you can see, it has been trending down consistently, even despite the plus token and COVID collapses. I mean, people for the most part have been.
So this means there's more and more value locked up in stablecoins.
Exactly. Like, but you can see it in the other way around, which is more new money is coming into the market because more new stablecoins are being minted, right? So therefore,
right. But here's the double-edged sword. There are an unreasonable number of conspiracy theorists out there that think that these stable coins are being created without any backing, only to pump the market, which is a narrative I've been fighting for a while, though it's hard to fight that narrative against Bitfinex, whose life's work is to prove that this is true, and he has a lot of evidence to that regard. But I am still of the belief that no one is creating these stable coins out of thin air to pump the price of Bitcoin. That narrative never made sense to me. And if that narrative was true, we would have never fell from 20,000 and we would be at 100,000 plus by now without ever having a bear market.
Yeah, you can make that assumption. I think I actually don't. I actually disagree with that whole theory as well, and especially now, when most exchanges that are producing all these stablecoins are gearing severely towards regulation. I mean, it would be absolutely insane from them to create this thing out of thin air. It's completely
right. And we know that Tether, and by the way, it's nice that there's a list of like 8 different stable coins there, but Tether is still like 90% of that whole cumulative mess. So it's basically Tether. And we know for a fact that Tether is only 75% backed, not 100% backed, but that's because somebody stole 25%. That's not because 25% of Tether was printed out of thin air to pump Bitcoin. It was because, someone wanted to take the underlying money.
Right. Yep, exactly. So that I think that's pretty much covers the on-chain stuff. This is especially the SOPR and the short time frame NVRV ratio. I think those are the best ones for, let's say, swing trader. For a swing trader, if you're a day trader, you can go into the same indicators but on an hourly perspective. Let me just show you, let's say, SOPR from an hourly perspective. You need the paid account. I don't know which one. I have the highest on Glassnode, so I'm not sure which one. But for the most part, you need, I think, the highest account in Glassnode to track this thing. But this is SOPR on an hourly resolution. Just to give you an example of how you can get like intradaily tops and bottoms, mostly bottoms if you're in the bull market. As you can see, it's extremely noisy. So let's smooth it out with I don't know, a 3-hour moving average. Let me zoom in again. Again, so you're assuming you're in a bullish trend. You're working in a bull market. So this is a 3-hour short time frame or 1-hour resolution SOPR. It still gives you the longer time frame signals, meaning this, assuming you're in a bull market, whenever you penetrate or oscillate almost below the level, that's a good buy spot. Right now we're in overvaluation, similar to, let's say, levels like here. So maybe if you get the bottom, let's say here, it's a short-term bubble. It's short-term long, I mean. Same here, right? You have a wide period of bottoming in the oscillator, but you still need, it amounts mostly to an intraday or shorter term long. If you want to go into like what's the actual bottom on a full, weekly to monthly correction, I recommend going back to the daily resolution. But this helps out to get, bottoms whenever you see it penetrated below 1, or at least, getting into longs from an overvalued position. So using this metric, if you want to go into intradaily, high leverage, you want to play out a long, I will wait it out for it to go down a bit. It looks good from a higher time frame perspective and a daily resolution. But if you want to like re-enter a long, or you missed the last bump, I would, according to this, I would wait it out a little bit and at least let it touch 1 again, and then you can have a safer entry. Just to give an example.
Yeah, I got a question on that. How do you explain that giant spike, the recent one?
Actually, I don't know.
October one. The
this one, right?
Yeah, that like what the hell happened there?
I'm not sure. I'm not sure what happened.
So it just feels really out of place.
Yeah, sometimes you get that internally. That's why you have to like smooth it out. Let me go to, let's say, a 12-hour, because you get that in SOPR. And this is a better, I mean, you still get this one, but I think this one is overall a little bit better. So just wait for for a touch of 1 with, a 12-hour.
Wait, but this just happened a few weeks ago. Could this be like Square buying a bunch of Bitcoin? Like what?
No, because I mean, it goes up if there's a lot of selling or distribution going around. So sometimes you get this noise, but right now I'm not sure. But I mean, as you can see, it's mostly intraday noise. But we're decoupling from the one line, so it's kind of oversold locally. But as you can see from here, you can remain in a range for a long period of time and then go back to 1. So it's not like we're not going to have like forcibly a 20% correction. It just means that we at the very least need some consolidation at these levels, and then get some market equilibrium, and then you can like repose your longs.
All right, you got anything else for us?
No, I think that's it for now. But we can go over Willis charts if you want, or anything else.
Yeah, I'm actually checking with Willie. We're gonna keep those low proprietary for his newsletter subscribers.
Makes sense.
So maybe let me check with Willie. But I have other charts. We have plenty of charts, guys. If you want Willie's charts, we did a podcast with Willie back on Monday. So let me not be an asshole like I usually am, especially to friends this time. So we're going to keep Willie's charts proprietary. But let me get screen share because we got other things we can show. So we'll get to that. So by the way, I looked up. So here's Google Trends to buy Bitcoin, and they're non-existent.
Oh, that's good. That's very good.
That is very good. So like back in last summer, back in early April or May of this year, it was even higher. And we were higher on the trends. I don't know how behind this is. It's possible this is a few weeks behind and the number will spike. So what is this here? No, October 18 to 24. It's only ranked at a 7. So we were higher back in August, late July, August. And we're not even close to matching 2017 numbers. So that is a positive development.
That's very good. Yeah. This is the US only? Do you have the worldwide?
I'm not sure. It's showing me US here, but even if it's US only, it doesn't matter because it's all relative. It is US only, actually. I can try worldwide and see what that looks like. Same. That's kind of what I expected. Yeah, Nigeria has been ranking very high for Bitcoin, but I'm sure it's localized as well. And Australia, I'm never surprised. Australia is always pretty big. But yeah, so the number is pretty low. Locally to the US or but here's the interesting one. If I do Nigeria. I want to see how they spiked in 2017 compared to now, because they're the big spike right now. So I wouldn't be surprised, right? Past 5 years, but I don't think it's giving me the data for the past 5 years, unfortunately. Oh yeah, there it is. See, if you look at Nigeria, if you localize it to Nigeria, then you don't get the 2017 spike, and you get the spike now. See, this is weird. Oh, okay, that's 2015. Okay, this does make sense. See, so here the 2017 spike was non-existent, but their localized spike is huge right now, which I kind of find fascinating. And if we look at
I think in developing countries, you will see a lot of more interest coming from, you know, the general population, in the sense that they're gonna stop. I mean, given the COVID panic and the whole worldwide economic situation right now, you're gonna see a lot more interest coming from general population in developing countries that want to get into either USD and most likely Bitcoin as well.
Right, but you can also see that, like in South Africa, for example, they did have a 2017 spike, and now it's non-existent. So it looks like Nigeria is discovering Bitcoin now, and they didn't really get the memo back in 2017.
I wonder how it looks in, let's say, Turkey, like countries where you have a lot of, you know, inflationary.
Like Israel as well had some. Oh,
yeah,
look at that, Turkey.
Argentina, Turkey.
Oh, Argentina is interesting.
Is
but I think Argentina had a Bitcoin community. It would have spiked back in 20. Oh, look at that. Interesting. Very choppy here. Yeah, I'm trying to think of what other interesting places. What about China?
Yeah, China's interesting.
And trying to
Is
think
that China?
of what else.
China
Yeah, I don't think it's very useful data.
Yeah.
I don't think it's useful data. Trying to think of what else we could use before we move on back to charts.
Let's say maybe Korea or Japan, because I mean, you see a lot of the...
Japan would be interesting. Yeah, Singapore is having a little bit of an uptick. Japan would be interesting.
Well, Singapore makes sense, right? There's a lot of crypto moving into the country, I imagine, especially as...
Yeah, look, Japan, everything is just 2017. And what was the other one you mentioned? Hong Kong?
Korea or Singapore?
Hong Kong, Korea, right, Korea. Hong Kong, I'm sure would have had a 2017 spike.
Yeah, always. That's why I'm interested in it, because you can get a lot of the irrational exuberance coming from Asia, especially. I mean, you had huge premiums on Korean and Japanese exchanges.
We'll close out with the PayPal news. I want to grab a couple of charts. So this is someone that I interact with quite often. I got to get him on the show. Platizov on Twitter. You guys should follow. He does great charts. Only needs 19 more followers to break 10,000. It's always a big milestone. None of your business. And he does good charts. I grabbed a few of them. He actually sent me all of them. I'm like, holy shit, I got to get him on a show to talk about all his charts. I like his charts because they're really, really clean. So he posted this in one of the Telegram groups. I'm sure he's in your Telegram groups as well. I'm sure you've seen this chart.
Yeah, he's in pretty much every Telegram group I can find.
Yeah. And so he posted this. And it was interesting how the secondary low, though this secondary low is stretching it a little bit, but there was it back in the early days. The secondary low was very close to the first low and in that, plus 20% range the last 2 years. But what I commented was, as you can see, the time between the primary low and the first critical pullback has been doubling every time. And the prior bear markets or the prior time span to get to a new high has also been pretty much doubling. And that's why I had my timeline way further out. But it looks like we're pushing new all-time highs way ahead of the timeline. We may even push to new all-time highs in less time from the last span. So if you take when the top was made and when the top was broken, if we pop to 20,000 this year, we would have done it faster than in prior cycles. However, the time span between the two lows was significantly longer, which kind of told me that we shouldn't be breaking out this early. And this creates a very interesting dynamic as to, is this a bullish phenomenon or is this a bearish phenomenon? Here's what I mean by a bearish phenomenon. If we break out unreasonably early, if let's say later this month, I know there's only a week left, so sometime next week we hit 14K, and then we pull back to that $11,500, $12,000 area that David and I talked about earlier. And then from there, we come back to 14K by end of year, or even by early December. And then going into next year, either late December during holiday season or early next year in January, we're breaking 20,000. That is a very accelerated timeline. So that would lead to potentially, in my view, two outcomes. One is not very good. One is saying, because we're breaking out so early, we're going to race from 20,000 to 50,000 somewhat quickly, maybe in a 6-month span. And then we're going to start our bear market unreasonably early, which also means we could be ending the bear market before or going into the next halving, something like that. Like maybe a year before the next halving, we can end the next bear market because we're going to top at 50K. Because the other alternative, what's up?
I actually think that as of now, I may be proven wrong on that. And I think a lot of people adhere to this theory, which would be, I think the Bitcoin market cycle is time boxed on the halving days. It's always relative to halving days, either from speculation or I think the broader market does price them in accordingly. So the way I see the delay of getting the full-blown bull market, I think it's just a delay coming from plus token and COVID. And I just see it as pent-up energy, buying energy that I mean,
no halving.
Whenever you have the actual breakout from 14K and then 20K, you're going to have a massive, I think a lot of the buying pressure that was built up. I mean, because we saw a lot of buying behavior and accumulation and holding behavior during this whole chaotic, 2018 and 2019. So I would expect the bull market to be much more aggressive that people give it credit for. I mean, one reason being the Bitcoin bull markets are always like that. They always overshoot and undershoot, or find equilibrium. They always go crazy. And the other one is with being in a very pent-up bear market that has proven to be, from a non-chain perspective, very high in accumulation and holding behavior. So I would imagine that a lot of people, I mean, I wouldn't be surprised, to be honestly, if we get 100K or higher within a year and a half.
No, I agree. And for me, the greater likelihood of reaching that 100K to 150K is it becomes more likely the later in the cycle we break out. So the later time-wise we break above 20K, the more this pent-up demand will keep driving the price higher. A quick breakout above 20K late this year or early next year, I think we would just rise very quickly and we would top out a lot earlier. Now, that doesn't have to happen, but I think the a better way or a more stable way to get to that 150 would be a breakout late 2021, if not early 2022. And I think that makes it higher. But at the way we're moving now, it's very likely we're going to break 20K very early next year. And I don't know if Bitcoin will have enough momentum to go to that 100, 150. And if it does, that means it's rising very, very quickly. And brace yourself for the big crash that's going to come. So you almost don't want 150 very, very early, because the massacre could be worse than the last two bear markets.
It's all about the relation between price and time, right? Meaning volatility, right? The more volatile it gets to the top, the more the crash is going to suck. That's pretty much the nature of Bitcoin and every asset. So, but the good part of it is, I think most people will underestimate the price and the time. So you will for sure get irrational exuberance at the end of the cycle. I don't know if that end is at 100K, 250K. I mean, the highest estimate I've seen, which is not completely moronic, is 850K, meaning 2 standard deviations above stock to flow ratio. I saw it in a tweet. I don't remember who came up with it, but that's exactly what happened in the last cycle. I mean, stock to flow was given 6.5K or something, and it went to 20K, which was two standard deviations above it. If we get the same thing, stock to flow is given to 150K in neutral. If we overshoot that, it can go to a fucking 800K or so. Of course, that's extremely, that's the extreme best case scenario. And if we get that, the crash is going to be fucking huge, especially if we get that there in 1 year or 2. But the good thing about that is, once you start breaking thresholds in the price in the cycle, assuming you're going to keep with the 80 to, let's say, 90% corrections, you still have a very, very, let's say, well-priced Bitcoin if you're a long-term holder, right? I mean, buying here, if it goes to, let's say, 100 to 150K and it corrects to 50K, you're still in a very good position, right? It all depends on how high we get, and in which time frame. But for the most part, I'm not worried about Bitcoin making bubbles. I think it's a good thing for Bitcoin specifically. One of the reasons is because you break the thresholds, and then your corrections, even though they may be severe, you still get very good prices, especially compared to at the most 4 years ago. And Bitcoin being so flashy, so momentum driven, I mean, that's one of the main value propositions of Bitcoin. I mean, price fucking pumping, right? That gets a lot of interest, new money, new actors. And even if people right now have forgotten about 2017, I assure you, as soon as we get 20K again, all those people are going to buy again, right? So it's just the way markets work, and it becomes it's an advertisement for Bitcoin on the long term when you get the bubbles.
So here's another good chart where the break of a prior 200-day moving average by the moving average itself leads to big upside. And we do have an audience question that says, do you guys think that we could have a new high around 50K faster, and then a correction into a mini bear market, and then continue bull run into another year parabolic insane target? And the answer is, I kind of do, because we are rising so quickly. I can envision the repeat of 2013 that actually had 2 bubbles within the same year. Now, I don't think we're going to do it as large and as quickly. So let's say you dampen this one a little bit, right? Because this went from $10 all the way to $250 in a matter of months. So that's unreasonable. I don't see that. But I can see a move from 20K or from current area all the way up to 50K, and then happening, and it'll take longer. It's not going to take 3 months like this did. It's going to take, 6 to 9 months. So sometime in 2021, next year, we reach that $50,000 area and then correct, possibly even lower than 20K, but at least back to 20K, and then get stuck there for maybe a year at most, maybe 8-9 months, and then have one more push to that $100,000 target, maybe even the 150 that David mentioned, before the next halving. So it's possible we can have two of these bubbles, and when you add them together, it could be almost the equivalent of the last bull market. But I can definitely see two mini bulls with one mini bear in between.
Yeah, I mean, you've had several instances of very harsh corrective moves within a bull market, which is the 2013 scenario you just gave, and within a bear market, which is the plus token COVID double dump, right? So you can have a lot of volatility and a lot of fucking chaos. And the next 10 years, I do expect a lot of demographic and just financial, societal chaos. I think that comes from, demographic cycles. If you go into the fourth turning and Strauss generational theory, going back to that, assuming we have a lot of chaos within the next 10 years, that should show up in asset prices, including Bitcoin, especially because Bitcoin is more volatile. So expect the unexpected, both in the good and the bad, right? So just be prepared for everything.
Yeah, here's another really good question from the live stream. If Bitcoin doesn't top 20K by 2022, does it make you nervous for Bitcoin? At what point would you be worried? My answer is no. I would be even more bullish. If Bitcoin doesn't top 20K going into 2022, let's not talk about there's a big difference between January 2022 and December 2022. Mm-hmm. So let's say if Bitcoin doesn't top 20K on a weekly closing basis by the beginning of 2022, I would be even more bullish for Bitcoin in a more sustainable way. And I would trust the network even more that when it breaks out, it's really going to break out and never look back.
Yeah, I agree with that. I think as long as you don't penetrate and start losing support levels, or see a lot of the things I would watch out for in Bitcoin in terms of things getting bad, in my perspective, obviously breaking major supports, the regular TA stuff, that's one. The other one would be, inherent flaws with the network, security, programmable, getting bugs, getting some fucking minor contingency that we didn't expect, so, something like some black or gray swan in Bitcoin.
Right. No. So in that scenario, let me define it a little bit. If the price of Bitcoin stays between 10,000 and 20,000 going into even 2023, so going into 2023, if Bitcoin has not broken above 20,000, but it also has not fallen below 10,000, I would be more bullish than at any point in my life about Bitcoin, because the greatest thing for Bitcoin's future is price stability. It's the greatest thing for Bitcoin's future. Now, eventually, it will rise. It's just the way Bitcoin is designed, because there's very little Bitcoin being mined. So because of an understanding of Bitcoin's utility and an understanding of Bitcoin's stock-to-flow ratio, the more stable Bitcoin is, the slower it rises, the better it is for the entire Bitcoin network and the world. So I would be insanely happy if Bitcoin stays between 10,000 and 20,000 for the next 2 years, giving all of us smart people a chance to accumulate more Bitcoin, because a fast 10x move in Bitcoin early next year is only going to lead to a big bubble top and bubble crash and delay Bitcoin potentially being this world reserve currency. Because if it stays in this bubble mentality, it's not good for anyone.
The third thing I would watch out for.
Good for hedge funds. Mm-hmm.
Yeah, good for trading, the volatility.
Yeah, it's good for trading, which is not a use case. Like this is the argument. I'm sorry, guys. I'm a trader. David's a trader. Trading is not a use case. When I try to say that shitcoins are shitcoins, they have no use case, I get people, what do you mean? Trading is a use case? No, it's not. Trading is not a use case. Trading is something you can do to make money. Trading is necessary to establish the price of an asset, but the asset itself needs a real use case. And trading is not enough to give an asset a use case, contrary to a lot of new beliefs.
The other thing I would watch out for, and it was the thing that kept me the most worried post-COVID and until a few, let's say, perhaps this week, it would be extremely high correlation with Bitcoin and other assets, specifically the S&P. I don't want that shit to be correlated with the S&P. I mean, I've seen the charts from Plan B going into the correlation co-integration between Bitcoin and S&P. It's obvious to foresee that if there's a lot of asset price growth in general, I mean, Bitcoin keeps pumping with everything else. That's fucking good, right? But what I want to see is Bitcoin stable or pumping while S&P collapses. That's one of the best things that can ever happen to Bitcoin. And if that happens even with gold, that's even fucking better. I mean, I don't want it correlated with anything. I don't want Bitcoin to be a beta play of any other asset. The main reason is because I do believe that despite the fact that we may keep pumping in the S&P and in stocks in general, I do think we're setting up into a major index and ETF bubble in asset prices in general, going into bonds and stocks. And with the baby boomers retiring and several other fundamental situations going on, I think that bubble will have a major correction, and it's a very fragile system in general. So hopefully Bitcoin does not correlate with that, or if it correlates, the best case scenario, it correlates on the moments of right tail volatility, and it decorrelates on the moments of left tail volatility. That's the idea.
Yeah, and I see a comment right there. Digital Money says a lot of peeps will lose patience by 3 years if we stay under 20K. That's the point. That's the point. That's what separates weak hands from strong hands and allows Bitcoin to just fly to the upside after the non-believers exit. That's the whole point of that scenario.
That's the whole thing. I mean, if you get to those levels and are between, let's say, 10 and 20K for a year, that's severely low volatility. I mean, the longer the breakout, the bigger the pump, right? That's what everyone says.
Right. And that's why I made that bet at the end of last year that Bitcoin will stay under 10,000 for the majority of this year. And it got away from me a little bit here at the end. But I was looking good there for a good 8 months on that bet. Anyway, we got a couple more charts. We do have to wrap this up. I want to get this maybe 10 more minutes, and then we have to wrap this up. So here's another chart that he put together, basically showing you each 10x move in Bitcoin. And I do think another 10x move is coming. The question is when? When does it start? It feels like it just started. This final break above 10,000 is starting the next 10x move. I thought that it was going to happen a little bit later in Bitcoin's life cycle. I thought this would start, in 2021, not 2020, but it looks like it started in 2020. And because it started so early, I now feel that it's gonna, like over here in 2013, we did 2 10x moves in a single year back in 20. So here's the first 10x move. and that's the next 10x move. I surprised. I mean, he has the arrow right here, but it happened within the same
what's
year.
The target? What's the target of the latest 10x move? 100K?
Oh no, they're always at they're 10, 100,000, 10,000, 100,000. So it's a perpetual 10x move.
Got it.
And my view is that next 10x move will require two waves, not one. The way we had a double wave in 2013, but that double wave was 10x each. So this time around, I see the double wave to combine into 10x. Maybe it'll be 15x because there's two of them. So maybe it'll go over by a little bit. That's that 150K area.
I'm gonna be honest. I think considering the whole cycle, I mean, you may have a bubble, 2-3 bubbles within it, but at the very top of the cycle, the bull cycle, I wouldn't be surprised. I much rather, I don't want to bet. I'm not gonna bet, but I would go more for 250K than 100K, to be honest.
Wow,
I wouldn't be surprised.
And you're assuming this bull cycle happens within the next 4 years into or around the halving as its latest point.
Yeah, I wouldn't be surprised. I mean, about 250K within 2 years, to be honest.
Wow, that is incredibly bullish right there from David. And I know David. He's pretty analytical. So that's not a John McAfee kind of statement there.
I'm not betting my dick on it. Right. But I wouldn't be surprised. I'll just leave it at that.
All right. One final chart real quick. So this is his another really cool chart that I thought that he did. So at each peak, he's showing you how far away that peak was from the 200-day moving average. And each peak does get us closer to the 250-day moving average. The 2011 peak was 13 times higher than the average. April was only 9.7. The second wave in 2013 was 6.7. The 2017 peak was 3.7 times higher than the 200-day moving average at the time of the peak. And our latest one, this was, though it did not make a new all-time high. This was the peak last summer. The 2019 peak was 2.7 times the moving average, but this one was different because the moving average was still somewhat low because it was still declining. So the next time we go up, it would be interesting because the moving average will rise because we're rising right now on our 200-day moving average, and that's about to break its prior all-time high, which once again usually sets us up for more upside. So I think that a 2x over the 200-day moving average for the next peak would be very, very interesting. So we'll see. So we'll see if my view on a double bull cycle with a mini bear in between happens over the next 2 years, let's say.
Yeah, I mean, you may have like two arguments against that, like double bull cycle. I mean, the one statement you can make is that Bitcoin, since more institutional smart money is coming into it, the corrections will be more healthy and therefore the pumps, right? It would be an asset behaving more like a big boy instead of an emerging asset. So that's one. So it may not get as exuberant as you would expect it. It would just be like a nice, a nice ascending channel type of market structure when you just pump, retest the last support, as you always mention, and then keep pumping, and that would be extremely healthy, right? But I think up to a point, especially in times of crisis, you have the incentive to get into very high levels of irrational exuberance because most people would look for momentum to avoid, being fucking poor or being at a loss or whatever. And in that section, that's exactly what's happening with equities right now. I mean, the whole indexation and ETF bubble is coming from most assets right now are not being driven by natural price discovery and valuation. They are driven by liquidity, floats, market capitalization, and therefore momentum, right? I mean, what's more momentum driven once it gets going than Bitcoin, right? So if everything gets into a bubble, Bitcoin is gonna overshoot everything in the world. So I don't know. You can go either way on the argument. But to be honest, I have to be perfectly honest with you, Tone. I actually want a bubble. I think over the long horizon, bubbles and irrational exuberance are better for Bitcoin than just natural market behavior. I think it advertises to the world that Bitcoin exists, and then it pumps like crazy. And I think that despite the 86 or whatever % corrections, it segregates between strong and weak hands much better than any other asset. So I think over the long term, to be honest, I think irrational exuberance for the Bitcoin network is better than worst. It's a net win. I don't mind.
No, it's a reasonable view and argument. I, of course, prefer more of a rational market, but that's also because literally most of my audience revolves around my view on the price. And when the price acts irrationally, my, I guess, guidance on what I think about the price also becomes irrational, because this is where I'm mostly wrong on shit, because it's very difficult to predict the top of a bubble. I find it very difficult to trade irrational behavior. So while it may be good for the things that you mentioned, for what I do, it's not ideal. So I guess my own personal bias is I'd rather have a rational market. And I had a similar argument with, or a similar debate, I think it was with Peter Todd, or somebody else, or Jimmy Song, sorry. So Jimmy Song, so I was with, when I talked about this with Peter Todd, we were on the same page in that the halving event is a shitty event for economics of the Bitcoin space. But Jimmy made the argument that the halving event is so important mentally, and it creates all this hype and all this buzz. And Jesus, I had 50 people on. I broke all records on my YouTube channel that day streaming for the halving. And Jimmy won me over with that argument, saying that while the halving event might be a nuisance economically and running your Bitcoin business, it's a huge event in order to generate more buzz and Bitcoin popularity. So, and I got to side with Jimmy on this one. He won me over.
I think in every cycle, the three most important events are: one, the halving; two, whenever you break all-time highs; and three, whenever you get the cycle top. In terms of news and narrative for the wider audience, I think those are
to be honest, I remember very vividly the big capitulation crashes. The COVID one that just happened, the break of that giant descending triangle in October, November of 2018, where we fell 50% in a matter of days from 6 to 3, and the bear whale events back in 2015, I think, forgot the year, but that one wasn't even the low. There was a monster capitulation low that came in January of 2015 that was preceded by the bear whale incident. So I remember the big catastrophes as well. So I would add that to it.
Yeah, I mean, you can summarize it. Whenever you have high volatility, is very important to the wider audience, because that's when people take notice of Bitcoin in general, whether it's right tail or left tail.
One second. Okay, so here's the monthly chart, and we are very close to getting a new monthly top. And to me, getting a new monthly closing top is as good as getting a new monthly swing high. That's just my take on it.
Yeah, yeah. Everything looks fucking bullish. I mean, getting a close first a weekly close, then a monthly close like this. It's just so fucking bullish. Like, there's not much comment on that.
All right, so real quick, one more look at my view on TA. The weekly is still hanging in there, just under 13K. I would love to see a weekly close above 13K. That's basically my barometer right now. It still puts us at a new all-time high weekly close for, this bull run. New high weekly close in almost 3 years, and we're very close to, new all-time high. So this is absolutely incredible. The daily chart, I think, is going to consolidate for a little bit. That's my view on it. I see a little bit of a consolidation. We kind of went up a lot. The MRI indicator will give you a top in a couple of days.
What's the MRI, by the way?
It's the new version of the TI that I had before.
Okay. Got it.
It's the evolution of what I did before, but the concept is the same. You have access. I got to drop you my latest video.
Nice.
And I'm not going to talk about the short-term time frame. Hey, so last thing before we head out, the PayPal news. Give me your take on this, and then I'll close us out with what I said. I kind of said it this morning as well, but let me get your take on the PayPal news.
Well, certainly bullish. From a causality, you can go back to it. One, it's a sign of institutional actors embracing Bitcoin. There's a trade-off on that. Bitcoin is going to get highly regulated going forward. There's a lot of talk about the travel rule and about pretty much every derivative exchange getting KYC in the next few months. That's going to happen for sure. The KYC perhaps in the next few months, the travel rule perhaps next year. So that's the trade-off. So, you should keep an eye on your keys for sure, especially if you're a US citizen. And it's a huge driver of adoption, especially, retail mass audience adoption. It's not going to be strong hands. Don't expect that from a PayPal buyer, regular PayPal buyer. It's kind of in terms of market actors that are going to use PayPal to buy, I'm guessing most of them are going to be the same people that were, taking the buying out of Coinbase in 2017, right? So for sure, it's new money, but it's also, the trade-off is you're going to get a lot of weak hands and irrational of exuberance eventually that, compounded to another bubble. But overall, I think it's good news.
Yeah. So, and the other thing is, when you read it carefully, it really reads like people will be able to convert their PayPal. Well, you can move money into PayPal and buy Bitcoin as of probably in a week or so. It says in the coming weeks. They're also not charging you any fees to convert cash into Bitcoin till the rest of the year. And if you have a PayPal balance that just sits there in PayPal, like I actually do, because I can't seem to connect my bank account to PayPal, that balance is just sitting there. So I might actually say screw it because I see a Bitcoin bull market and move some of that balance, if not all of that balance, into Bitcoin because it's sitting on PayPal anyway. It's not like I'm getting that balance off. So I can see a massive influx in Bitcoin buying once this thing opens at some point early November, maybe.
Yeah, I agree. You get the first correction. A lot of people are gonna the price better, and you've been in the space for years, so you may go all in. But I'm guessing most people are gonna, at the very least, start to dabble into Bitcoin and holding some of the PayPal reserves in Bitcoin. That's for sure. What other Bitcoin, Ethereum, Bitcoin Cash, and Litecoin? Fuck.
Yeah, so the Bitcoin and a bunch of stupid is what PayPal's doing.
Yeah, especially Bitcoin Cash and Litecoin.
Oh, I'm dying for them to launch this thing before the Bitcoin Cash fork so that they learn a lesson.
Yeah. Yeah, I mean, everyone's gonna like have to get their grasp on how crypto actually works.
If they launch this, I gotta check when that hard fork is. But I gotta check when that Bitcoin Cash hard fork is, because if this thing is available before the hard fork, I wish it's like the day before, I might buy a little bit of Bcash just so I can see the disaster, and then I can give PayPal hell on if I think they didn't do it, if they didn't handle it properly. It's kind of like one of these things. It's you buy like $10 worth of Bcash, but then you act like it's $10 million. It argued with their client support over their stupidity of handling a hard fork, because that's the only way they're gonna learn their freaking lesson.
Yeah. Yeah, that's gonna be fun to watch.
Okay. All right. Hey guys, on this note, we're gonna call it a day. Don't forget, you can check out tonevays.com. If you are looking to learn how to trade, you have a free tutorial right here under Learn Trading. I have a couple of videos. They're up for sale through PayPal. As much as I hate it, I got to use it. So you can check that out right there. The MRI indicator that David mentioned earlier is also available. Just click on MRI indicator and go from there. That's pretty much all I got. If you want to support, check out the affiliate page. And other than that, we are calling it a day. Where's my end screen share? There it is. David, thank you for joining me on this episode. It's been a week of guests, so it's been great. Any closing thoughts?
No, just keep, what would it be? Be careful, but it's looking good.
All right, cool. And David's info is in the video description if you want to follow him on Twitter. Hopefully he'll write some more Medium articles in the future. Thank you everyone for watching, and see you all